In the last video, I showed you a first look into the top-down process for high timeframe trading. Top-down analysis is very important, and it's good that we went through it, but I imagine at the moment for a few of you, it may have gone over your head. It may be looking a little bit too deep when we haven't really spoken about how to put the processes into action. So it was really just a first little look, but in that video, I showed you the process of refining zones. We started on the high time frames and we scaled all the way down, refining zones and areas smaller and smaller to get the best execution, where we could actually get a really small time frame execution for a high time frame trade. So following on from that, in this video, I'm going to show you the process of refining zones. This works for high time frame and low time frame trading alike. So we're going to follow this concept through into the low time frame videos, and it works across all time frames. What refining zones does is allows you to find a zone of interest on a high time frame, which actually gives you a setup idea, but then scale to the lower time frames to actually find a refined version of that zone. For example, a 15-minute zone within a 4-hour zone, or if you are low time frame trading, a 1-minute zone within a 15-minute zone. When you find these refined zones, you can actually then execute using that refined area to get a better entry, tighter stop loss, and higher risk reward. So we're going to show an example in this video. We are looking at Euro GBP on the 4-hour time frame. And we are seeing here an area where the sellers are losing the momentum. You can see that by the sideways action. And this is the area where that's really confirmed. We've had a push down, a consolidation showing the sellers have pretty much lost all momentum. And we do have buyers now entering into the market. Then we have one final push down, sweeping out the liquidity under the lows. We spoke about that concept in chapter 1. And then we had a push up, equal high, and then a higher low and a higher high. So for me, no trade really would have been present from this area, no buys from this area, because we hadn't formed a higher high. But now that we've actually pushed up and broken first of all this high and second of all this high, we could be looking towards this higher low for an entry using the structure, supply and demand, and imbalance concepts we spoke about. Okay, we have a bullish higher high, that's the structure. We have a clear 4-hour demand zone, that's the demand, and we have an imbalance leading into that zone. So this would be a very good area to actually begin looking for some form of buy like so. Now, the problem is if we were to buy this zone, we're looking for potentially an entry at the top of the zone, a stop loss beneath the zone, and then our targets would actually be, very, very small in terms of risk reward. This has a 25 pip stop, which means we have to do 25 pips of upside to even hit the 1R point. We obviously are looking for 1 to 3, 1 to 5 or more. So we don't want to have to, hold a position for 100 pips just to get our standard profit out of it. Now, there's two ways around this. First of all is using the midpoint of the zone. This is something that we can do. And if we use the midpoint of the zone on the higher time frames, that allows us to refine our areas and actually get better entries. But the best way to do it and the way to really get the tightest risk reward is to scale down and refine entries. So this is something to keep in mind if you are, not active at the charts. Maybe you work a 9-to-5 job or you are away from the charts in your prime trading sessions. The midpoint is a good place to enter. But when we shift it to the lower time frames, you'll see that the most refined entries come from those refined zones. Now, an important note before we get into it, using this information here where the midpoint can be a good entry for a demand or supply zone. If you are trading on the 15-minute or below, do not use the midpoint of zones for entries. Most of the time, the top of the zone is going to get tapped, the midpoint will not get filled, and you will miss the trades. So if you're trading the 30-minute, the 1-hour, the 4-hour, or anything above that, the midpoint for the zones is a very good tactic to use. But if you are trading the 15-minute, 5-minute, 3-minute, 1-minute, 10-minute, anything like that, do not use the middle of the zone, use the top of the zone, because usually you are going to miss your trade otherwise. So what we can now do, now that we have a setup idea, obviously the sellers losing momentum, the buyers taking control, and the trend shifting into a little bit of an uptrend here, is scale to the low time frames and see if we can find a better zone. So we'd start off by simply going to the hourly time frame. Now we can see this is a little bit choppy. What this does is gives us two zones. We have obviously a zone here. We also kind of have a little zone down here, but it does look like it's been retested. So the zone of interest that we'd probably be interested in here is going to be this one. But the problem is the risk reward still is not the greatest because we'd probably want to clear that low anyway with this stop because we don't have a clear indication of whether or not the market could potentially dip into this area. So what we can do is go a little bit lower, 30-minute, not a whole lot has changed. If we go to the 15-minute, however, we will see that we have a tighter little zone to work with. And we can now see clearly that this zone down here of interest has been retested. Okay, we have this first zone. We had a push up, a pullback, a retest, and then a push up. And then that formed this area here where we had a push up, a pullback, and a retest. And then we started going again. So we know that price is efficient here, okay? We have efficient pricing here, and then we have the inefficient pricing here. So the inefficiency actually leads down into this zone here. So what we can actually do is grab our tool, mark it onto the last candle before the impulse there, and that is going to be our zone of interest for this trade. Now I'm just going to quickly have a look at the 10-minute time frame and see what that says. I don't think we need to refine much further. 10 minutes is telling us the same thing. So what we could now do is grab our entry, place it on the top of that 15-minute zone, and we could put the stops beneath. Now there's also some wicks there. I'd probably want to clear these wicks with the stop. You could actually go ahead and not clear the wicks, but I like to be a little bit more conservative with entries and maybe a little bit safer. And we could go with an entry there and a stop loss there. And we can see now, if we go to the high time frames, that trade that was a 3.5R trade is now a 10.3R trade. And while you can't really see the zone too much here, we've scaled in and we've worked out the efficiency of the market. So something that's really important when you are refining zones is to make sure you look at the efficiency or inefficiency of the market, like I just did. Make sure you are choosing the right zone. Because here on the hourly, you may be tempted to go for this low zone. But when you look at the 15-minute and so on, if you think about what's happened, we have demand, push away, retest, push away, forming a new demand, pull back, retest that demand, push away once again. So we know that this pricing is efficient, this pricing is efficient. This is the area that we actually have that inefficiency. So make sure you're always thinking about those different things when you are trading. And also another good thing to note is on the low time frames, we can also see that this structure has broken. So we have a high here, pull back, and then another push up. So we can see the low time frame trend is also in our favor, and that's going to give us good indication that this is a good buying point. So now on the hourly time frame, if we just allow the market to play out, we will see that we get a nice tap in here, and then after that, the market begins to move away very, very nicely. And we just have this random target on for this trade's sake. But we remember this was a 3.5R position on the higher time frames. And here we can see, fulfilled very nicely, is a 10.3R position. So refining zones is the way to get high risk reward. I'm sure, the fact you've even joined the course, you are probably interested in that high risk reward trading. And you've probably seen some of the setups I've taken of 10R plus. And this is how we do them. Okay, this is just the simple way to do that, is to actually refine the zones by starting on the high time frames, scaling to the medium, scaling to the low, and refining the zones to each and every time frame you go to actually make sure you can get the best possible risk reward out of each position. And that is the process of refining zones. So as a quick recap, we want to first of all find a setup plan on the high time frames. Then we use the zones we have on the high time frames and look for smaller zones within, always accounting for efficiencies and inefficiencies. If we have an inefficient zone and we have efficient zones beneath, the inefficient zone is the one we want to focus on. And then we can begin to scale down to, the hourly, the 30-minute, the 15-minute, the 10-minute, potentially even the 5-minute if you want to go really refined. And you can get and then find a very tight area to actually buy from, stop below, and you'll know that it's a safe area to put your stop in because you've refined the zones. Like looking here on the 4-hour, for example, you would not have got a stop loss in here because you'd see, okay, it's still within the zone. But because we went low and we worked out the efficiency or inefficiency of the market, we know that all the pricing beneath this zone is efficient. So if we were to break through this zone, we would not be interested in holding the trade, which therefore means we can tighten the stop in and be prepared for an invalidation if the market pushes below. It's very unlikely, due to the efficient price below, that the market's going to pull all the way through our stop, trade into the low area of this 4-hour zone, and then move away, because all of this is efficient. And if we do break the imbalance zone, that's kind of telling us the sellers have retaken control. So when refining zones, it always comes down to thinking about market efficiency and market inefficiencies, and also just scaling down from time frame to time frame to find the best possible zone for your trade. Now remember, when we said you can enter on the 4-hour midpoint, but we don't want to enter on the 15-minute midpoint, we want to enter at the top. You can see that is what we did here. Now in this example, you would have been filled in on the midpoint, which would have given you a good trade. And personally, that could be something you want to go and backtest. Maybe you want to backtest it and see if the 15-minute midpoint does work. Because for you, if then you find out it does work very well, you're going to tighten the risk reward even more, and you could potentially double it up towards a 20R trade. But from my personal experience, I do a lot of trading, and I do a lot of trading, I do a lot of testing, and I have seen that the midpoint is often missed when we start scaling it too low. And I would rather cut my risk reward to 10, which is already insane, rather than 20, and actually make sure I don't miss trades. Because the amount of trades I'll miss, it's obviously first of all going to damage my psychology a little bit. And aside from that, it's also going to make me miss a lot of opportunities. I would rather catch 3 10R opportunities than catch 1 20R opportunity and miss 2, because you're going to make more on the 3 10R opportunities. So that's the process of refining supply and demand zones. You're going to see that in action all the way throughout this entire course now, be it the high time frame or the low time frame trading. The next videos are going to be finding setups, formulating them, finding the entries, the stops, the targets, and so on, and then managing a trade on the high time frames. Remember, this is high time frame based work, but everything you learn here is going to follow over into the low time frame. So definitely watch all of this, even if you are looking to be a day trader. I hope you've enjoyed this video. I hope you've learned a thing or two. And this is one thing to really go and test. You might want to back test this now, or you may want to finish till the end of this high time frame section so you know exactly how to look for trades. But refining entries is very important if you want to take high risk reward opportunities. So it's one thing that you definitely cannot slack on. So thanks for watching, and I'll see you in the next video.